Hey, what's going on, guys? It is Sunday, May 2nd, 2021, about 9:22 p.m. And it looks like right here, live on YouTube, it looks like Ethereum is going to hit a new all-time record high and blow past 2,000. Blow past 3,000. So that should be something pretty interesting to see. And this has been a cryptocurrency I've gone over on this channel that I'm particularly bullish in. I think they're just in terms of the overall development and the platform of this particular crypto. I think that we're going to see significant upside. So this is kind of interesting now that we see Ethereum going for 3,000 live right here. But this video, I mainly wanted to go over some of the earnings reports that came out last week and sort of give a preface of what I think this week is going to turn out to be in the stock market. So I'll sort of minimize my face and we will go into the first particular stock that I'm very bullish on that reported earnings, which is Atlassian. So Atlassian is a collaborative software maker, and they essentially guided even higher for Q4 revenue. So in essence, they delivered about 92% EPS growth as revenue rose 38% to 568.7 million. So they beat both Q3 views as well as they guided higher for Q4. So for those of you who are unfamiliar with my investment thesis, I essentially just follow Investors Business Daily, so Cancel Investing Bill O'Neill, which essentially states that you want to look for or invest in companies that are growing their revenues at least 25% plus quarter over quarter, that are growing their EPS or earnings per share 25% plus quarter over quarter, have great return on equity, higher than 25%. So in this case, Atlassian has about 51% return on equity, as well as phenomenal institutional sponsorship. And institutional sponsorship essentially means that the best mutual fund managers out there are driving their investments into the particular asset that you're looking at. So in this case, Atlassian. So if we look from the January 2020 quarter, about 840 mutual funds were invested in this particular name. As of March 2021, which was just a few months ago, that number has grown to 941 of the best mutual funds out there. So that's signaling that more institutional money is piling into this name. You never want to be invested into a particular stock or security that doesn't have strong institutional sponsorship, right? You don't want the majority of the buyers to be retail buyers. Why? Because institutions have a ton of money and they tend to do their due diligence more so than a retail investor, and they size into positions for the long term. So they'll usually hold a position or even build positions over years or decades, right? So that's just the first stock that I wanted to cover. I'm particularly bullish on Atlassian, and I do believe that this stock should, roar past 300 going into the winter of this year. The next one that reported earnings that I just want to point out is Shopify. So ticker symbol SHOP. They had an absolutely unbelievable quarter, about $103 billion investment gain they had. Revenue jumped over 110% to $988.6 million. Gross merchandise volume leapt about 114% to 37.3 billion, and shares surged. So again, this is one of the names that fits my investment thesis, that I want to look for companies that are growing their EPS 25% plus. In this case, Shopify grew their EPS almost 1,000%, and they're growing their revenues at almost 100% quarter over quarter, which is obviously on an annualized basis, but that is really, really impressive, especially for a company of that size. For a company that's doing about $977 million in revenue, and they're still growing at 25% plus, that's pretty astonishing. That's pretty impressive, right? So another thing that I wanted to point out about Shopify is that in 2020, they earned about $3.98 a share. In 2021, they're projected to earn $4.35, and in 2022, they're projected to earn $4.86. So you want to look for companies that are growing not only their quarter-over-quarter EPS, but their annualized earnings per share as well. If we take a look at Microsoft, ticker symbol MSFT, as well as Google that reported earnings and Amazon that reported earnings, the main things, in my opinion, that we want to look for in these earnings reports are their cloud growth. So if we look at Microsoft, we look at their Azure cloud platform. If we look at Amazon, we look at their AWS. And if we look at Google, we obviously look at Google Cloud. And the reason why I'm looking at this is because if you think about a company like Amazon, everybody just focuses on their core e-commerce business. But what I'm more interested in is their cloud business, because as we move away from traditional legacy systems and legacy infrastructure, more businesses, small, medium-sized, as well as enterprise, will migrate to a fully cloud-integrated system away from that legacy infrastructure. And that's going to really propel growth, not only on the top and the bottom lines for these particular companies. And I think that in Microsoft's case, I think Azure, their cloud platform, posted 35% revenue growth, which is phenomenal, right? And if we just round it out, in 2020, they earned about $5.76. In 2021, they're going to earn $7.73. And in 2022, they're going to earn $8.38. So all of this talk about how the market is overheated, the stock market's overvalued. Well, yeah, you have to look at the fundamentals. So the biggest fundamental in the market, in my opinion, is the Federal Reserve. And they have continued to push the narrative that they're going to be extremely, extremely accommodative to this market. They're going to continue to print a bunch of money on the back of a blowout earnings cycle. So I really don't see anywhere for the equity markets to travel but higher. Yes, we may have a little bit of a correction here and there, but if you look at the fundamentals, companies like Microsoft, Amazon, all of your big tech companies, Atlassian, ServiceNow, they're posting phenomenal numbers, right? It's not like these businesses are in structural decline. They're growing their revenues, they're growing their EPS, they're growing their free cash flows. So these are healthy businesses. It's not like these companies are in any sort of financial distress. They're actually doing quite well and growing their earnings, as well as launching massive stock repurchase programs. So if we look at ticker symbol GOOGL, which is Google's Class A shares, Google not only reported a blowout quarter, but they also launched a share repurchase program, so share buyback. And I believe that was to the tune of $50 billion. So essentially what a share repurchase agreement is some of the profits that the company makes, they don't choose to spend it on research and development or R&D. They'll actually just go ahead and buy their common stock back, which sends a signal to Wall Street that the management team really believes in its company and is willing to invest money and purchase shares at current market value because they believe at a later date it'll be worth significantly more. So that is one of the other things that I would highly suggest looking at when analyzing a specific stock that you want to invest in is, are these companies that you're looking at launching share buyback or repurchase programs? Some of the most notable ones off the top of my head would be like a Google or an Apple that continuously launch share repurchase programs. Let's wrap this video up. We will go over to the crypto side of things now. Like I've explained before, I'm continuously bullish on Bitcoin and Ethereum. I think these are going to be the two main hedges for inflation that is coming down the pike. And it's probably going to be a big tax haven as well. So I don't see why Ethereum couldn't even reach $20,000 per coin if you look at sort of a traditional stock to flow model on Bitcoin and sort of replicate that to Ethereum. If you look at the growth in wallet addresses, the growth in development on the platform, if you look at all of the stuff that's happening in the DeFi space and NFTs, the utility and the value is there for me. And it's also a way to diversify out of traditional equity markets that could potentially be taxed at a higher amount, especially with the Biden administration coming in. But even then, I don't think higher taxes will have too much effect on the equity markets in terms of increasing capital gains taxes. I think that cryptocurrencies in general are just sort of a call option on the future of finance and technology. So that sort of wraps up the video here, guys. Please subscribe if you are new. The next video, I'm going to be going over some of the earnings reports that are coming out this week. And hopefully, maybe I'll stay on a little bit longer. We can see Ethereum cross that 3,000 threshold. And I really think that as a good long-term investment, it is good to diversify between a basket of cryptocurrencies that have true fundamental value. So if you think of Bitcoin as the Mac Daddy cryptocurrency is a store of value. Ethereum, if you're a developer, you can build different products and services on it. You can get into the fintech space and lending space. It's essentially a space that I want to be involved in because there's so much going on, and it's just like an ecosystem, a platform. I sort of think about it like if I could invest in Facebook when Mark Zuckerberg was just starting Facebook, right? It's sort of like those network effects can really take hold and really show us some exponential growth. So I'm bullish on Ethereum. Too bad we couldn't see it quite hit 3,000 here live while I'm shooting this video, but I'm sure by the time I post this video and you guys see it, we should be well over 3,000 on our way to 20,000. So I hope you liked the video, guys. Have a great week, and I'll see you in the next one.